Oh, hey there. Yeah, welcome to Too Long It Didn't Read Finance Edition, where I'll be talking about some personal finance and trading with a little bit of a TLDR version up front. So stick around, like, subscribe, comment, and here we go. All right, guys, welcome back to week 6 of the trading journey. Feeling better this week as like I said last week, we reduced our position size just because we had that string of losses. The emotions were starting to really get um, pulled in there, which is never what you want to do when you're trading. Ideally, you want it to be boring, and if it's sexy and exciting and you get your heart racing, you're probably doing it wrong. So we had a couple of earnings this week. As you can see, we had 33 trades. So some of that was just some maintenance. Some of it was closing out some positions that we've had for a while that were just finally at their wits end, and we're at the max loss that we were willing to take. And then of course we had a couple of new positions moved on. So we'll start at the beginning of the week. The first trade put on was Take-Two Interactive, video game company. They had earnings, and this one we'll get into a little bit. I'll probably use that as the chart example coming up here because I kind of messed up on that one. I held it thinking that basically I didn't follow the plan, right? The plan with trading these types of trades is I put it on the night before, I wait for volatility to leave because the event is over, earnings is over, and therefore I just close out at the best price I can in the morning. And then using technical analysis a little bit, but with Take Two I got a little too invested in it beat earnings, all good news, all good stuff, yet it was down big. So to me, especially being a Tuesday, early in the week, we've got 3 days left till expiration. I'm thinking maybe it has a rebound and held on too long, ended up with a max loss of $500 when in hindsight, using the backtesting feature of the Thinkorswim platform, I actually could have gotten out for a small win of about 950 at 950. So as we see here, this is a $10.11 credit. I could have gotten out for about 975, 950, and made at least a small profit. And ultimately, all that is, the profit doesn't matter at that point. We just kept our $500 from being lost. So even if we broke even, that would have been a better trade. So didn't follow the plan quite like I should there, and so that one kind of stings a little bit, but it is part of the journey as we go. Like I said, I do feel ultimately net good about this week as far as how things went, even though the numbers might look a little redder than we'd prefer, but we'll talk about that. So next we had some closing trades. So Netflix and IBM were spreads we put on after they had earnings the previous weeks. Their earnings were rather exaggerated, up or down. In the case of IBM, it was down, so we sold some puts expecting a bit of a rebound and recovery, which it happened nicely. So we got a nice little close it out for 45 cents. We got to keep over a dollar there, or $100 in profit, and that was pretty much set it and forget it. I was kind of surprised when the order went off. I thought it was something else, so it was nice to see that. That was a nice little win there. Same with Netflix. They really shot off after earnings to the upside. I thought it was too exaggerated, so we sold some calls expecting it to come down a little bit, and it did nicely for that was about $200, I believe, because they had a lot of, obviously the stock price is higher, and they also the implied volatility was still pretty high on that one, so got a good credit. Baidu and C Limited was just some 30 to 45 days, the longer term spreads that I put in, really the first ones of the year, and just finally closed them out because they were not able to be rolled any further, so I couldn't manage them to my benefit by taking in some more credit. And they weren't quite at max loss, but they were getting close, and so I tried to close out around 4. I think C Unlimited, I kept forgetting to adjust the order there. So that's on me. We should have gotten out about 425 instead of 473. So it could have saved a little bit there. And then Baidu 850. That's about right. We were shooting for about 8 to get out of that and just be done with it. And so those are two big hurts, big losses that hurt this week that we ended up taking. So we didn't have to. They had some time left on them. But C, for example, was about 60 points over where we wanted it to be, and it's only expecting to move about 5 or 6 points by the end of the week. So really not in our favor there. So just closing out, resetting the capital, getting it back to work on a better trade. Moving down the list here, we've got ACOM, which was an earnings play. Same with all 5 of these. These all went decently well. Um, yeah, Zillow was up a little bit, or outside of our range a little bit, so we closed out for less than max loss. That was a pretty good trade because it went on to be a full loss after that, so got lucky there. IFF is a fragrance and flower company, I believe. Um, so made some decent money there as well. We got in for 6. We got out at about 5 on one of them, so that's $100. Like I said, if we'd have been in our normal position size of the 1,000, this could have been $300. But we're not doing that. We're sticking with 500. Get our mind right first. Yeti unfortunately didn't go our way either. 430 credit. We had to pay a little bit more to get out at 540. So a little bit of a loss there. FXI was another one. This was an option alpha suggestion, so a 30 to 45 day trade. Just finally got out of it. It just wasn't looking like it was going to come back down into our range like we wanted it to. And it was sitting at right about max loss anyway, even though we had and really just a couple more days left because it's this Friday is when it will be done, and just closed out to get rid of it. Not really happy with that trade at all, but stuck to our plan, even though we got the idea from someone else, and it just didn't go well. Acom, so this was, they blew out earnings and actually fell pretty hard to the downside outside of expected ranges, so we sold a little put spread on that we expect Acom to go up a little bit in return, recover a bit from its drastic drop, and we'll make a little bit just like we did on IBM and Netflix above. And then we closed out iRobot for a nice gain. We got in for 12.30. We got out at 8.50. So it was a little over $300 in, or almost $300 in profit there. Obviously, we would have loved to do that with more contracts, but still a good win all the same. CRISPR was a platform error actually. The data feed showed that it potentially had earnings on Wednesday, and then it never happened. So we got in at 6.15. We got out right at 6.15. So just a couple of dollars in transaction fees. But really unfortunate when that happens and the data is not up to date. Luckily, it doesn't happen too often, but that is something that don't really check too often because I assume out of this 1,000 trades I made last year, maybe only one of them had this issue. So hopefully no more of that, but luckily didn't lose anything there. Next day we had some more. We had DVA, Net, Datadog, Disney, and Expedia. Again, a decent day. So DDog, we got out for a little $40 win. Take-Two, we finally closed from Tuesday because it just wasn't coming back into range. And this was, I think, Friday. Yeah, so this was Friday. So we got in Thursday night. And then we had DDog close for a little win. We had max loss, like I said earlier, on Take-Two. Expedia, we had a little win here. 704 is what we got in for. We got out at 5, so we got that $200 credit. That was good. Same on Net, I believe. Yeah, we got in at 702 and we got out at 6. That's a nice $100 winner. Disney was a good one. We got in at Disney at 771 and out at $4. We could have actually held just another few minutes because Disney actually opened up higher, but then started falling off right at the open, which was right the way we wanted it to happen because it was a bit high outside of our range, so it came back down into our range nicely. It had some candles that just showed the chart was looking bearish, like it was going to continue. So we could have gotten out for 350, another $50. Not that big of a deal. I'm not going to split hairs there when it's a win. Is a win, but if we had a larger position, say 3 or 4 contracts, all of a sudden that $50 is $200. So, and again, like I said, it was only 2-3 minutes longer, and we would have gotten the 350. And I say that because the order originally was set at 350, the target, and the target I adjusted it slightly because it just was being a little volatile early on. So we took a little bit of a less than target profit on it for $4, but just a great example of sometimes if the chart's showing it and it's telling you, hey, hang on a second, go ahead and do that. So, but still a good win. And then DVA was all over the place. That's a bit of a smaller company. The spreads are usually wider on that, and so happy to get out at 3, even though it wasn't that great of a win, 365. But we had 2 contracts, $120, not too bad. And then if wrap up the day, we had some new trades. So again, take two fell down farther than it should have, and it was all great news. So we sold some puts, expecting it to head back north at some point over the next 30 days. Same with Zillow, blew it out of the water to the upside, so we expect that to fall a little bit over the next 30 days. Fragrance was the same way; they did really well, so we're expecting them to fall. And same with Cree. Cree was actually a high implied volatility scan for the thing. It wasn't an earnings play, any of that. They just had, they're doing pretty well, and the portfolio was getting a little too bullish. So I like to check my deltas here, and I like to keep this number in single digits and preferably just a smidge negative, um, because markets crash down, they don't crash up. And ultimately, I'm just looking for theta for time to pass because I'm selling all of these spreads. So sold some CRE. That was a thing from the implied volatility scan that I run, but also I did CRE versus something else because it was a good call play. I needed negative. I sold a call spread which is negative deltas. I am expecting that particular stock to go down, which helps my overall portfolio be a bit more bearish, which I like to be kind of neutral overall in my overall thing. So we will turn that off, and we'll turn this guy on real quick. So yeah, so not ideal. So we had to close those three: Baidu, FXI, and C, which was pretty big. So let's see here. Yeah, so we had high IV. So we had 1400 between Baidu and C. And then if you add FXI, no, that's not what I want. And FXI was like 236 or 63. So not ideal, but it would have taken us from a $1,100 $1,200 loss this week to $574 profit. So again, I'm showing this because it doesn't, those were 35 40 days back. Can't really contain when those happen, but like I said, I felt good about the earnings trades this week and the trading that we did this week, which shows that's why I'm doing this, is to show you that it was in fact good. That's why I feel good about it, because we did make $570 in profit. But overall, because we said those trades earlier and we managed as we did, it's actually a net 11,000. So for the year, we're down. This thing that isn't quite right because it says, I think, 6,000. Oh, 40, yeah, 4,200. So, but we're down 6,000 in the month of February. So February's really been kicking us in the teeth. January is pretty good. Down 4,100. We've taken almost 2 grand out, if not more. So some of that is from there of just getting that income draw every week, 200 bucks out. But still not ideal. But I'm feeling good. I'm feeling more confident in the rest of the year. And yeah, so that's it. Thanks for watching, guys. And next week we will, or sometime later this week, I think I'm going to do a bit more of a technical video on maybe the candlesticks or some patterns in that I use, or what you're seeing, and how to kind of walk along with me. So thanks again for watching. Have a good day. Just kidding. I told you we were going to talk about Take-Two a little bit. So Take-Two Interactive, here's a chart of what it, and just kind of my thought process behind why I held on a little bit longer than I probably should have. So here was Monday night. So we had the 213. I sold the 212 put and call, so right about this line. And then I went out to, what did I do here? Yeah, the 212, and could go as high as 227 and as low as 197. So we had about a 15-point spread, 30 points total of a range to stay between, right? So as long as it's anywhere in here, we're good. And so obviously it didn't go ideally. It fell pretty hard in the aftermarket, and then pretty much held this line. So this, not realizing in hindsight, right? If we don't look at, let's see if we can. So let's go here. So this is all we're seeing. It actually looks pretty good. This is holding firm at the 200 level. Again, we can go to 197 as low as we want, as low as we can still make some money, maybe, potentially. And so it falls pretty hard, but it starts to slow down. That's what all these candles are kind of telling us. They're not as big or as tall as the previous ones. And then we kind of start to flatten out here. So, and especially with, I'm seeing good news. I'm seeing they beat earnings pretty well. I'm seeing they beat sales and revenue pretty well. So all good news. The market can freak out a little bit. And so I'm sitting here looking at this like, okay, so I adjust the order. So that's the other thing. This is kind of why it was an error on my part this week. So if you look at this, what this tells us is we started out, we sold it and filled Monday night for 10.11. So we had a $10.11 credit. When we're selling options, we want to buy them back for just a little bit less or as much less as possible from the credit we received originally, because we get to keep whatever credit is left. So I'm trying to sell or close out this position, buy it back, because again I sold it, so I got to buy it back for anything less than 10.11. So my initial order I set at 950. I adjusted in the morning because again it fell off. It wasn't looking too good. I gave it a little bit more. I said 990. You know what? Just get me out for pretty much break even. Happy with that. And then right about 5 minutes beforehand, you'll see 824. I modify, which is like this candle here. Let me see if I can circle that for you guys. Which is like right about. Oh, that's not what I want. So it's like right about here is when I started to have this great idea that I might be able to get a bunch more. So I changed it to 7. Well, I think I was just a little sleepy this morning because 212 down to like 203 is not 7, right? 212 minus 203, it's not 7. So I think I just messed it up, and that's what kind of screwed me there. So it never came down to 7 in my back testing with the on-demand feature, which is the kind of go back in time. It got as low as 901. So the 950 or the 990 would have been perfect. Even the 974, but I didn't change that until later. That was already past the time frame. So just not ideal, of course, but we know that in hindsight a little bit now. But even still, I'm not sure why I changed it to 7. So that's an error on my part for sure. And I track that. I can make sure I tag that in my journal. You know, all the errors that were absolutely on me. There wasn't an issue. There wasn't oops, I didn't think it was going to do that. I clicked the wrong button, right? So you got to know that and really reduce those as much as possible. But then ultimately, yeah, it just fell down and then just never really, as you'll see here, just kind of hovered down around 200 for the rest of the week, which is not ideal. 197, you're right, is what I was shooting for, but since I waited all the way out here, and I think I closed out like right at 195, 196, of course, so pretty much max loss on that, and just not ideal, especially when I could have gotten out here. But yeah, so that's a little bit more of an insight of it, and thanks again for watching. This is actually it. But again, check back later this week for something a little more technical, where you kind of walk through and we'll talk through it. So thanks, guys.